Hello, I'm Murray Longworth. Today I'm discussing how disruptions in key shipping routes like the Panama Canal drought impact global supply chains. The Wall Street Journal reports that severe drought has forced the Panama Canal Authority to reduce daily crossing slots. This reduction has led to longer wait times, increased costs for shipping companies, and $600 rise in price of a 40-foot container. Some ships face average wait times of 9 days, while they must pay a higher auction price to bypass the queue, reaching up to $2.3 million US. Global shipping demand has surged since the COVID-19 pandemic, putting pressure on supply chains. The global container freight index has risen steadily, with a disruption like the Panama Canal drought playing a significant role. By July 2023, only 64.2% of container ships were arriving on time, a sharp drop from the pre-pandemic rate of 77.7%. Major setbacks like the Suez Canal Houthi attacks and the Panama Canal drought-related capacity reduction have led to these delays. Shipping container rates have also spiked, with the costs for a 40-foot container reaching $3,964 by late 2023. This spike has been driven by issues like Houthi attacks on Suez Canal, illustrates how geopolitical and environmental events impact shipping costs and global trade routes. This volatility is also reflected in fluctuation earnings before interest and tax (EBIT) for major shipping companies, emphasizing the industry's vulnerability to disruptions and external pressures. Since the COVID-19 pandemic, global shipping demand has surged, straining supply chains. This is reflected in the global container freight index, which has risen steadily by disruptions like the Panama Canal drought. By July 2023, only 64.2% of container ships were arriving on time, a significant drop from the pre-pandemic rate of 77.7%. The Suez Canal Houthi attacks and ongoing issues in the Panama Canal are major contributing factors. Shipping container rates have also soared, with costs for a 40-foot container reaching $3,964 by late 2023. These disruptions include Houthi attacks on the Suez Canal have caused shipping delays and increased costs. Furthermore, the volatility in the shipping industry is evident in the fluctuating earnings before interest and tax (EBIT) for major container shipping companies. EBIT peaked at 57.4% in early 22, but plunged to -3% by late 2023, reflecting an industry sensitivity to global economic conditions and supply chain challenges. To further illustrate how the law of supply and demand applies to the Panama Canal, I'll demonstrate in the supply and demand curve. The equilibrium quantity and price is represented here. quantity being represented here by a QE, and price being represented here by a PE. The upward shift in the Panama Canal supply curve suggests that rising prices or tariffs are not leading to a proportional increase in the canal capacity or efficiency. The upwards trend in the supply line is represented here by S1. Despite the high prices, constraints such as infrastructure and water shortages due to the drought limits and the canal's ability to expand capacity indicate that the supply curve is relatively inelastic. The demand curve for the Panama Canal is currently stable, showing that even with the rising prices, the demand for the transits remains consistent. This inelasticity is due to the canal's critical role in the global trade, making it indispensable despite its higher costs. However, if the prices continue to climb because of reduced supply, shipping companies may be forced to start looking for alternative routes, causing a potential leftward shift in the demand curve. This shift could lead to a new equilibrium with lower prices, fewer transits, though it might also result in longer shipping times and increased costs, impacting global trade significantly. We can now see that with the shift in the supply line to S1, it's now forcing a new equilibrium price, which is here, and we can see that comes with a reduced quantity of shipping slots, which is represented here by Q1, also means a rise in the price, which is represented here by P1. So now that we have represented the new constraints and supply, drought-related constraints in the Panama Canal, along with the disruptions like the Houthi attacks on the Suez Canal, have caused freight rates to surge. These pressures on global supply chains may force shipping companies and global markets to consider alternative routes, potentially leading to longer shipping times and even higher costs.